Let me talk about your letter, and let's talk about what's going on right now. Because one of the things that's so fascinating in this letter this morning is just what's happened during this company, during your new time here. I mean, you've been here for a very, very long time, but in this new role. And we're all now talking about supply chain issues. The pandemic seemed to be over. Now we have issues in China and what that's going to mean, big inflationary pressures. How do you just see things as they are right now?
Well, it's quite an interesting time, and we grew 3 times faster than we expected in 15 months. We had a fulfillment center network that we built. It's a pretty big network that we built over 25 years that we had to double in 24 months. So it's really been a time of extraordinary growth. And at the same time, when you grow that fast, and with some of the things happening in the world, there are also challenges. We had to double our fulfillment center network. We hired about 300,000 people last year alone, which is a lot of people. But at the same time, even though we hired a lot of people, we couldn't hire all the people we needed in all the places that we needed. And so that created all sorts of challenges in placing inventory close to our customers as we typically do. And when you have to place it a little bit further away, it means you have longer transportation costs to get there. All the rate of transportation has gone up over the last number of months. And, then you see what's happened with the war in Ukraine, where it's created a bunch of inflationary pressure. If you look at the cost of fuel, if you look at the cost of metal and building, just very different. And, then you look at some of the supply chains, as you mentioned, there are certain items that are very difficult to get. We all have a lot more demand for chips than there is supply right now. And because we design our own chips and we buy a lot of chips for the things we do in AWS and our devices, even in our vehicles, we get a fair share of those, but still it's not fast enough and it's not enough. And I think some of the issues happening right now in China, where, as there are variants and as they're being very conservative and locking down production, creates some issues in getting products as fast as we need. And it's still more expensive and more time-consuming to get products into the country. So there's still supply chain challenges.
So when you have to plan out, how are you even planning at this point in terms of just how transitory or not these inflationary pressures are? I know you just added a 5% surcharge for third-party sellers to deal with the fuel cost. Do you think that is a long-term situation? Do you think that shifts back?
I hope not. It's the last thing we ever want to do is have to raise costs for our sellers. And sellers for us are, so important and so critical to the business. And in the early part of the pandemic, with all the costs I talked about earlier, right or wrong, we just absorbed all those costs for sellers. But in part because we thought some of those would attenuate as we got to the beginning of this year and some of the impacts on COVID changed. But with the war in Ukraine and then all the inflationary pieces that happened thereafter, at a certain point, you can't keep absorbing all those costs and run a business that's economic. And so I think that, we're very aware that that sellers have costs as well. They're very important customers for us and partners. And we'll keep looking at how costs evolve and revisit.
Right. You talked about chips being a major issue. What do you think we should be doing here in the United States about manufacturing those chips? And does Amazon have a role in that long term, you think?
Well, I think it should concern people that so much of the chip production is concentrated in one place. And there's, there are a lot of geopolitical things that could happen. And so I think it's quite wise of the U.S. to be thinking about creating more production here. And I'm very happy about the CHIPS Act that we've been working on in the country. It's a lot of money. It's $40 billion, and yet it's probably not enough. I think we probably are going to need even more than that to have the ability to withstand some kind of shock to production in a particular part of the world. But I think it's very important. We design our own chips, and we're big buyers of chips, and we're big customers of some of the big chip companies as well as producers ourselves. So there could be a role for us to play. We certainly want to help, and we certainly want to partner.